The real estate market often seems like a distant world where only an elite of experts is successful. In a time of so much uncertainty in the air and bad news, realist investing can seem intimidating. But today, I want to tell you that if you make the right decision today, you can enter the real estate market from the back door. Bad credit record? No credit at all? Do you dread the idea of having a home loan? Do you dream of owning investment properties? You are in the right place and right time, because we have created a program which is a tax lien and deed investment online course of only 14 hours. This course is specially designed for people like you who have big dreams. You will learn at your own pace and everything from your home computer. This is your chance. Join our membership for $19.99 a year. What are you waiting for? Visit our website primetimehomebuyerBuyback.org and sign up today for course access.
Blessings, blessings. Welcome to the buyback team. You're here with Lashley, your host, your team lead, tax lien expert. You could call me the tax lien lady. I hope everything is going well with you today. I do miss you guys. I haven't been live for about 2 weeks. I've been, just doing too much, and I wanted to make sure when I come up I have some good content for you. So as I stated, we're going to be going into what is an escrow account and how does it work, and this is going to be represented in both theories related to homeowners and real estate investors, because this is something that I think is very important that you should have set up at the beginning of a sale. This is going to protect you. I have a situation where I had a buyer who, stated that he was going to buy the home. We had an agreement set up. But the thing was, I, as a self-driven real estate investor, did not check with the escrow account company, and he backed out the deal. So when he backed out the deal, according to the terms, I knew that he could not back out the deal, but that did happen. So when I contacted the lawyer who actually read the terms and agreements, basically he read it for substance and not validity. Okay, so this is a learning experience, something that I learned. And that person, because he wanted to sell the property that he was buying from me at the same time, you know how they're doing these crazy scams, and his buyer wasn't able to fund. This is what I end up happening. So we're going to kind of talk about why it's important for general real estate investors like tax lien investors to know about this and to actually implement it. It may come with a little fee, but it will protect you. And anyone who don't want to use an escrow account in relation to buying and selling, you may want to question their integrity. So we have a formal PowerPoint. I do apologize for my lateness. I had to get it together. I had to turn some things around because I didn't like the arrangement, but we're going to get to it now. Now, hopefully everything shows on the screen. If the PowerPoints are not flipping on the screen, please just let me know in the comments and I will show it another way through StreamYard. Okay. So primetime home buyers understand the escrow for homeowners and real estate investors. So I'm going to make myself smaller on the screen because I do want you guys to focus in. You know how I am. Oh. Maybe I'll just take myself off the screen for the full presentation. I want you guys to focus in on the information, okay? So what is an escrow account and how does it work? What is an escrow account? This instrument is used to protect the buyer and seller in real estate transactions, okay? And that's what I was explaining to you just recently. It is an account managed and arranged by third parties that holds money or properties until conditions are met related to the contract. So we talk about contracts and having certain things set up even in the beginning of a transaction when you're about to buy, and that's related to the good faith agreement. Okay. So what that goes to say, in terms, this instrument helps aids in fulfillment of contract agreements. What in the escrow account and how does it work? How does the escrow account work? So a little bit just to distinguish between the two, having an escrow account in a real estate transaction, it acts like a good faith agreement deposit system. The money goes right to a third party until the conditions are met, which in some terms are title companies as well. The lender holds the homeowner funds via monthly payments for the property taxes and home insurance. So that is the second way that an escrow account is used. It is used throughout the lifetime of your loan. And we're going to kind of interchange with that information. And I'm going to highlight when I'm talking about each one. The different use of escrow account, again, this is just highlighting what I just said. Home buying process, escrow account, versus the next type is used through the life of your loan. Home buying process, escrow account. What type of escrow account is, okay, this type of escrow account is used when purchasing a home. Using a good faith deposit, which is also known as earnest money. Okay, if you have someone who's interested in buying your property, most likely you want them to put a little percentage down, and that doesn't have to be a big percentage of what you're selling, at least $500 to $1,000. If the contract terms are not met, then the buyer is protected and the earnest money is returned. So that is a protection for the buyer as well and the seller, because I had some negotiation issues with one of my last sales, and it did go through, but it took months. And because I had to really just, make sure that the relationship was great with the person and, continue to do what we needed to do to solidify the deal, it was kind of gut wrenching because we did not have a good faith deposit down. And as time went on, it makes it a little uncomfortable, but you do want to do it anytime. Say, hey, I need a good faith deposit down. That's going to get this process going. And when we have this contract, you have 15 days to 20 days to do this. We're going to get into that. And that's what slowed down my process. So everything that I teach you, I kind of reference back to what I have went through, the good, bad, and ugly. All right. So this earnest money will be applied to the buyer's down payment or total amount that's owed. Home buying process, escrow account. In some cases, funds from the escrow money is held post the completion of the sale of the home. Now, this is kind of in relation when someone is selling their home and they're still inside of the home. Okay. This is known as escrow holdback. Now, this is with the escrow that you actively have. Okay. And you actually put in. Escrow holdback is something needed if the seller agrees to stay in the home past the time of closing. These funds will be used to satisfy the agreement placed within the contract between the homeowner and buyers. This money can also be used to pay for outstanding bills such as water bills and may apply through this time frame. So that particular money, okay, so let me explain it. You have someone that want to buy your home and you're still there and they put an earnest money deposit down. That earnest money can be applied to or subtracted if you decide to stay in the home a little bit longer. It seems like a technicality, but that is different money from the actual money that's coming from the lender or however they're paying you. So that's where that particular money will be held to hold out the terms of the original agreement, i.e., if you have an amendment saying I need an extra 7 days to stay in the home to get myself out after the closing. Does that make sense? All right. Now, escrow account used throughout the life of your loan. This is throughout the life of the loan as a home person who is borrowing from a lender. Throughout the life of the home loan, I apologize for the typo, the lender will opt for you to have an escrow account. This is usually mandated. This escrow account will be used to pay the homeowner's taxes and insurance only. The lender calculates the base of your monthly portions of your mortgage payment, interest, and the life of the loan. So they calculate the life of the loan, so they can calculate a certain amount of percentage of interest, what's going to go to the principal, what's going to go to interest, and then they calculate a certain amount that's going to go to the escrow account. You need to know that because you need to know that that base escrow that goes in escrow may change. So this is how some loan payments change, even if you have a fixed rate. Does that make sense to you guys? So if you have a fixed rate interest on your loan, you may think, hey, it's never going to change. But if your insurance go up or your taxes go up, your payments go up. So this is another way how people are affected by this. Please keep in mind that some lenders can hold monies leading to a surplus in your escrow account. Ensure that it is not too excessive. This is something that I have went through where I had to go and say, why did my loan payment went up $150? Who can afford that? What happened? So I had to go to my insurance company and figure out home insurance. Oh, they increased my policy and I didn't know it. Oh, the taxes went up a little bit. What can I do to mitigate this? So look for a new insurance company, and it kind of lowered the price just a little bit. And we also talk about appealing taxes as well. You may get a no, but you want to find a base to that. Okay. And I could kind of talk to you about that too, because I found another base. Y'all know I'm always hunting. Okay, so contact your lender if you have any questions about overage in your escrow account. You want to say, hey, this is too much, because we're still living on a fixed income and we don't want them to what the lender had said to me one day was, well, you're going to get it back at the end of the year. No, I need it now. We have bills to pay, and that's not right. So this is why we got it adjusted, and it only needed to be increased about $40 at that time, and they increased it 100 and change. So please be mindful of this. Okay. And there may be other reasons why it increased too. And I'm going to get to it. Escrow accounts used throughout the life of your loan. As noted, you can see that this is a different way that the escrow account is used. Post the closing of the sale of the home, the lender will divide the yearly costs, as we talked about, insurance, taxes by 12 months and add them to your monthly mortgage payments. At the end of the 12-month cycle, your lender will send you an escrow account statement. This will highlight if you have a shortage or a surplus in your escrow account. And that's good to have a little surplus, but not a lot. Okay. You like to get maybe a little sneak check back, but just make it even so you'll be able to pay your bills monthly, you know. Okay. So escrow account at the end of the year. So you may have a surplus or a shortage. Within this document, it will indicate if the payments will increase or decrease or stay the same. Okay, so you want to look at the bottom of your escrow statement, and it's going to tell you what to expect next year. Like, hey, your payment's going to go up $250. And you want to verify, is that just for the full year or every month? Okay, because that's a lot. Escrow account used throughout the life of your loan. I'm highlighting which one I'm talking about specifically. If your property taxes, this is just an example, okay? If your property tax is about $2,500 a year and your insurance costs you about $600, that's a nice price. They're usually about $1,000 now. You may be between. You may have been payment. I do apologize. Your payment may have been increased, and it may be increased about $265 or so added to your monthly payments. $265, because what you're doing is adding the 2,500 plus the 600, and then you're going to divide that by 12. And this is about your estimate amount in your head of how much you're going to pay for your escrow, just adding that together. And if that's remarkably different from what the lender is showing you, because they are doing it on a percentage scale, you want to talk to them to say, hey, is that within my mortgage agreement? And two, no, we're not doing percentage scale. We're going to be doing based on what I need to pay. Okay. Stand up for your rights, guys. So let's continue. What is escrow account and how does it work? Escrow accounts is used throughout the life of your loan. Can you reduce the amount needed for your escrow account? Yes, I already been addressing that. We're trying to reduce it. If we don't need that much there, we're not going to pay it. Look for lower home insurance rates for your property. please pay attention to the details of your home insurance rates. Okay, insurance package, because what they will do, they have done this to me. They will opt for you to have a large amount for dwelling or rebuilding money. Meaning, okay, your home could be worth $200,000, and they will give you insurance to rebuild for $400,000, which doesn't make any sense. I do understand we have inflation, but most likely you're not going to spend $400,000 to rebuild a house that value 200,000. Does that make sense? So these are the things you want to catch with your eye when you're reading this, because that's what made me notice. I was like, why was my policy changed so much? How did it get so much? And they changed the dwelling insurance, okay, and the rebuilding fee. So that's what you want to highlight. Challenge or repeal your taxes yearly assessment. So I do have a video up, guys, about challenging your taxes, some of the reasons why, how to go about doing it. And it was some interesting videos up there, and lawyers who we have videos on YouTube that basically say, hey, challenge it. All you could do is get a no or a yes. But you want to know what grounds you can challenge it. So let me give you an example. You can't challenge it on this ground, but I did want to. I homeschool my kids, and they have a large tax that's going towards the school system, in which I cannot use none of the services. Some counties would allow homeschoolers to participate in football and things like that, but this particular county did not. So I didn't hold it to them, but I did feel away. But most recently, when I challenged my taxes, I noticed that a big percentage of the value base of my home was being taxed for the school. So let me give you an example. I need you guys to understand this, okay? Now, if your home is worth $150,000, that total $150,000 is not taxed for tax purposes as far as county tax. What they do is take a percentage. And with $150,000 home, for instance, they will only tax about, let's say 20,000, 25,000. So whatever the tax rate is will be timed that 25,000. I'm just giving you an example. So I was looking at it on my bill, and I was like, okay, every other, entity here, the water company, building roads, whatever that I'm paying for, has the same amount of percentages taxed on, which is 25,000. Why am I looking at the school section and they're taxing on 98,000? Okay? Think about that. So right now I'm questioning why they're doing that. I was just on the phone with the assessor's office, about the appeal, and he said that he really cannot answer that question because that's out of his league. And I was so glad that he was honest. He said basically we just apply the bills to you guys, and we can do a home assessment. If you challenge the value of your home, this is where we will come into play. But when it comes to the percentage of how much they're taxing on the value, that is a calculation based by the tax commissioner. So now I have to write a letter to the tax commissioner, review all my taxes for each year, and see if this was consistent and why are they doing this. Okay, so yes, the tax lady just found something else out. I don't know if it's what it's going to lead to, but I will keep you guys updated, because that's a little suspect. And the school system is not even that good out here. Okay, so just had to give you a little sidebar, apply some real life scenarios to this. Okay, so it is best to look for multiple quotes for home insurance and compare your rates for the best premium available. What is an escrow account and how does it work? Continue. Escrow account used throughout the life of the loan. So we're back on that particular one. In some instance, the escrow account can be decreased. We talked about that. That's when it comes to the amount needed for your taxes insurance. Verify that the calculations to pay for these two items are correct. Talk to your lender first in detail. Then you go to your insurance company. Then you go to the tax assessors. If there's a shortage in your escrow account, the lender will ask for additional payment to satisfy this balance. So this is why it's so important for you to have control over the taxes that's coming or you're paying for. Okay, because you're going to still have to pay this. And sometimes it will happen in a bulk. So keep in mind, if your taxes or insurance payments change, your escrow account minimum balance will need to change. And this is why you will have if you have a fixed mortgage, sometimes your payments can change based on these two factors. So manage the escrow account. So who manages the escrow account? Many times an escrow account is managed by a third party. Usually this third party, which is a title company or a company that serves the mortgage company. So I gave you two examples. The title company will be what me and you will use as private sellers to protect ourselves and buyers too. So we'll find a title company in the area and say, hey, we have this particular situation. We're selling and we want to deposit our earnest money with you and make sure the agreement is good. Don't do what I did and get a buyer and get, a nice, a whole great offer and never call the title company. Okay, that's where I messed up. But you live and you learn. He was a scam artist anyway. All right. So the escrow does not only hold the earnest money, it also holds deeds and other documents related to the sale. So these are some of the things where you can deposit the deeds, making sure that they are correct. And so that's what I said. If someone don't want to use a title company with you, you may want to question their validity. Or as well, I'm going to be honest, in tax liens, there is a clause. Let me give you a heads up, tax lien and deed investors. And this is all from real life experience. In the state of Maryland, title companies will not insure a tax lien purchase, or foreclosed or transferred to a new owner before 5 years. And this is because there was a case where somebody was able to come back and actually redeem property that was sold through a tax lien sale. And that was, I think, within that 5-year term. So it became a law. So what ended up happening, title companies don't want to even have that particular issue. So what they say is, we're not insuring it. You just going to have to ride the wheels fall off in this situation, and hopefully nobody come and redeem the property. This is why I, the tax lien lady, teach you how, to do your due diligence on all parties who have rights to the particular property. You want to know if there's heirs to the property. Do they know about the property? You have to serve them correctly. And that has to be in the chain of service, especially when you're dealing with like a conventional foreclosure process. And that's what I had to do in Maryland with my tax lien. Not all states make you do a conventional process that take up to 6 months. Like Georgia, you just go make sure you perfect the title, get title insurance, and then you record it. If the person's in the home, then you have to get them formally evicted. So it's different processes that happens with the tax lien and tax deed process. Just to go to a straight, so you guys can understand that, to my tax lien and tax deed students, okay? So escrow does not only, so it holds these particular things to protect you, to make sure that these items are valid. As I tell you guys, do not opt to get a quick claim type deed. Please, quick claim deed is dangerous. The person may not have any rights to the property or even own the property. This is how the scams go on. So if you have a title company, they'll be able to catch that ASAP. ASAP. $250 probably save you thousands. Okay, so get insured. When dealing with a typical home loan and mortgage company, it is important to have insurance coverage. So that's what this is used for. The lender will require the homeowner to purchase insurance for the property, as well as to pay title insurance. Okay, so sometimes you have to pay for title insurance. And sometimes if with some loans, they want you to pay for like mortgage insurance. That's like if you can't pay the mortgage. Some of them is just very predatory. So be careful. Okay, I've heard of that. These documents will be part of the escrow account management. Do you need an escrow account? Okay. When having a mortgage, sometimes you can opt out to pay your own insurance and taxes on your own. This will lower your monthly payment and lower the amount that is needed in the escrow. Some mortgage companies will charge fees if you decide to do this. When you manage your own taxes and insurance. So sometimes they like, hey, we're going to make sure that you do it. Okay. Because if you don't do it, we're going to charge you fees and you may renege on your loan. You may have the option to opt out of an escrow account on your loan, but some loans do not allow that, such as VA loans and other conventional loans. So if you have a VA loan, things like that, it's just not going to happen. But conventional loans. and loans that you had to pay 20% down. Okay, so those particular loans in itself will not allow you to opt out. Okay, so I hope you guys are getting a bulk of this information and I'm not moving too fast. I took myself off the screen so I don't distract you, but I will be back on so we can talk about some things. So, the benefit of an escrow account, we kind of addressed these things, but we're just going to go back over it. Escrow accounts can protect the home buyer when interested in purchasing the property. It can also protect the homeowner from lapse of insurance or tax payments related to their property. Having an escrow account can reduce stress and pressure in both aspects, covering contract agreements, as well as ensuring that the tax and insurance is paid on time. And so that'll just get free your mind from that. Okay, you don't have to worry about that bill. Eliminating the homeowner from having to track due dates of taxes and insurance payment, because if you lapse on any one of those, especially insurance, you may affect your loan and have an issue. Um, Easier budgeting, giving you a peace of mind. The disadvantage of an escrow account, it can cause a homeowner to have higher mortgage payments. Monthly payments can change based on the needs of the escrow account. The escrow account do not cover and cannot be used for personal home or any other expenses. Supplemental taxes, other insurance are not accounted for under the typical escrow account. So don't even, just know it's for those particular items. And if you have extra ones that they mandate you for, you may have to pay for that out of pocket separately. Less control over your expenses, but control. Less, but control, because as you know, it can change. Possibility of overpayment. So you can overpay, which is a benefit at the end because you get a check back, but it's a loss because you could have been struggling all year with extra, losing an extra $100 a month that could have went to something. So steps in escrow processing. Open an escrow account, and this is for real estate investors, okay? For me and you. Opening an escrow account is typically done by the seller, but can be done by the buyer as well. This type of escrow account comes with stipulations that need to be met before the escrow deposit is due or can be withdrawn. These deposits are typically split into two parts, one for the good faith deposit, and the other remaining will be or may be needed to satisfy the remaining balance of things that need to be paid. Okay. In this case, third parties such as a title company that specialize in real estate banking and other financial endeavors can be entrusted to be the third party. So these are the persons that you want to look to be your escrow account processors. Please do not go to anybody like, well, I could just do it for you. No, you want these places to be bonded and insured and credible. Okay. Steps in the escrow process related to real estate investors. Getting an appraisal and home inspection. This gives you time and set the time standards within the contract for you to do stuff and the person who's selling to do stuff. So when dealing with a third party escrow account holder, there are stipulations that must be met within the contract agreement. These stipulations can come with timeframes. For example, the buyer can have up to 15 days to get an appraisal and an inspection done. And if you don't, then that's on you. The seller gonna want to move forward, and if you don't, then they're not obligated to wait for you to do that. In this case, the buyer can use the disclosure agreement to base their home inspection on. We talked about a disclosure agreement, what it involves and what it should say. What should it have for you guys? You want to know what the home damage is. If they in many states they have made it law that they have to have a valid and true disclosure agreement for you guys, for anyone who's buying a home. If not, it's going to be considered fraud and you can back out the agreement. So get a disclosure agreement. And that is at the time when the earnest money is being exchanged and everything. You want to break down of what's wrong with it. So when your inspector comes to the home, they'll look for those things, but they're going to find the other stuff too. Protect yourself, buyers and sellers. So at this time, the buyer can do a careful evaluation before fulfilling the rest of the deposit for the earnest money. So you see what I'm saying? You can put $500 down and say, hey, this is what I want to do by the 15th. And then the seller will like, hey, well, you have until the 20th to pay this percentage so we can make sure that the agreement is solidified. Okay. So the steps in this process is doing the walkthrough. It is very important that before closing date that the final walkthrough is done by the buyer. The buyer has the right to have have an outside appraiser and inspection company come to verify the conditions of the home. But that will be on you. That will be on your monies, okay? At this time, you as the buyer will have the opportunity to do a final walkthrough. If there are any major issues, the buyer may be able to back out of the purchase. This is when you want to be able to. So you got to have this in writing, y'all. Protect yourself. So closing the deal for real estate investors. Typically, at least 3 days prior to the closing, the buyer should receive a finalized disclosure. That's anything changes, things that the buyer found, they reported it to them. So the seller had to update some stuff, take some money off of the agreement just so you could move forward because they didn't want to fix it. Those type of things happen all in this time frame, okay? So this should entail detailed information related to the closing costs, escrow amount needed, and other fees included in the transaction. That is lawyer fees, transfer fees, taxes, and things like that. When the closing is completed, the escrow agent will rename the document in the new homeowner's name and file it with the local recorder's office. And you want a third party to do this. One, as a private investor and seller, it takes pressure off of me. I have enough dealing with the tax lien and tax deed sale and acquiring them. So when it comes to selling, I advertise for myself. You do your stuff yourself. But when it comes to making sure things are right, you get a lawyer and a title company. It is good. Or either or. Because the title company, it depends on the situation. Because some lawyers have the title companies with them. Okay? So keep that in mind. So when the closing is complete, the escrow agent will rename as we talked about. The funds then will be wired or forwarded to the seller and all parties involved in the transaction that are supposed to be paid. Now, we're kind of getting to the end of our presentation. Canceling an escrow account. Canceling your escrow account through paying your taxes and insurance on your own. This is how you can cancel it. This can be done only if the lender gives you approval to do so. Most home loans that requires at least 20% deposit will not allow this to be done. So let's keep this in mind. Rules of cancellation may vary depending on the lender. These are things that you should note before you choose the lender to move forward with them. Okay, in the case you pay for taxes when due and ensure there's no lapse in insurance, this can affect your loan, causing you to default. So remember, doing these things and canceling your escrow account, in the case that you don't pay your taxes, you lapse in insurance, you're going to be a creek without a paddle, excuse my language. So sometimes you just want to stick to the escrow account and let the lender handle it, but you want to be on their butt that they're not taking too much from you. Okay? You want to be educated about that. Okay, so what is the escrow agreement? These are just some frequent asked questions just to go over and hit some concepts before we sum this up. I think I could get my beautiful self back on the screen. I was getting a little headache, guys. But anyway, let's get to it. What is an escrow agreement? Do we know what it is? Escrow agreement is the condition and terms that is within the loan contract between the lender and the buyer. This holds the buyer to keep an active, independent third-party escrow agent to manage the account. Third parties are the best, okay? What is cushion? Having an active escrow account under your loan agreement can be a benefit because it can provide cushion, highlighting that you receive an overage back at the end of the year. Also, if there's any changes in your insurance or taxation. Sometimes your insurance go down. Not a lot, but keep hope alive, y'all. Okay. There may be extra monies to cover this without you having to come out your pocket. That's extra monies can be if it goes up and then they end up having a buffer for you. Okay. That's the benefit. All right. So what is shortage versus overage? Again, the overage in your escrow account highlighted by enough funds being left over after insurance and taxes is paid. This can happen in times where the loan company estimate the amount of monthly payments that will go towards your escrow account. Sometimes the estimate can be higher than needed. The shortage in the escrow account. The borrower will have to pay the full amount that is short in additional payment. So they'll say, hey, you $400 less in your escrow and your taxes is due and we paid for it. So next month you have to pay $400 plus your loan payment. So sometimes you don't want to get caught in that situation, guys, but it has happened. It has happened to me before. Usually, if there's a shortage in your escrow account at the end of the year, you will have to pay the shortage to the mortgage company because they're going to pay the loan. I mean, they're going to pay the taxes because they have interest in the property. So they're going to pay the taxes. Monthly escrow payment, can they change without a shortage? In some cases, based on your loan agreement. Now look at this. This is where you want to pay attention. You may be required to pay a certain amount towards the escrow in percentage. This can be a problem because if they require you to pay 5% of your payments and you don't, that 5% is not needed every month, you may have too much. And you want to note that in your original loan agreement. Please highlight, these are some of the things you want to highlight, as well as due on clause agreements. I always highlight that. That is predatory. They're not supposed to have that. They can't call in a loan just because they want to. It has to be a real problem, okay? So this is important information to go over with your lender, highlighting if they have this clause. It is best to get your escrow account needed adjusted and review yearly taxes and insurance changes. You want to, if it's for percentage, every year you want to look at your taxes, you want to look at the insurance and see, and you go right back to that lender and say, hey, this is how much is needed. Only an extra $250 a month on top of the base that goes to the principal and interest. Knock it off. I'm not paying more. You got to tell them, or I'm going to report you to the Federal Trade Commission. You know, lastly, baby, we're going to get somebody else to see what's going on. Hopefully they can help us. You know, sorry. All right. So how long do your escrow payments stay on your loan? Okay. And that is the escrow account on your mortgage usually lasts the life of the loan. This is something that is non-negotiable, and and if it is negotiable, negotiation should take place before the loan agreement is signed. Okay, this time can be shortened if the buyer has paid 80% of the LTV ratio of the loan. Now, if you pay most of your loan off and you're lender see that you're a great, customer, you pay your loan, everything's on time, and they like you 80% done with this loan. Sometimes they will like, hey, you can pay your own taxes. But at that point, why would you? Unless you have a problem with the way they're calculating your escrow saving account. In theory, all government loans that are backed by loan programs such as FHA or VA loans must have an escrow account. What happens to the escrow account when you pay off your mortgage? When your mortgage is paid in full, you will receive all funds or money remaining in the escrow account. At that time, the loan company is no longer responsible for paying your taxes or insurance. You must continue to pay these two expenditures, making sure that the property do not receive a lien. So somebody like us could come in there and buy it or invest. Tax lien investments, or have the ability, have the liability if an accident happens. So regardless, you want to keep insurance on your property. That's one of the first things I tell investors, private investors, get insurance. And then sometimes if you have insurance on your regular conventional mortgage, that insurance have addendums where you can hold another property under there, depending on the value. Because I was able to hold my land under my conventional loan mortgage and just let them know I have land there, and that was added. Does that make sense? The best thing to do is set the money aside monthly so you can make your lump sum payment once a month. So even if you're a person who owns your home and you don't have a mortgage, and if your taxes is $12,000, that's a lot. If tax is $12,000 a year, that's a shame. I'm sorry, but if it's $12,000, I'm hearing some crazy stuff. You got to save $1,000 a month. Just put it to the side. But I hope nobody taxes that high, because mine was going up to like 2,000 and change. I was like, no, that's too much. Okay, so how to remove an escrow account for your mortgage? If removal is allotted by your loan company, conditions will be set forth by your contract. In some instances, loan company will consider allowing you to remove the escrow account if you have a good payment history. Also, if you provide proof that your current home insurance policy is paid in full, they need you to have home insurance. They don't want to be liable for anything. They don't want nobody to sue you and take the property from you or put a lien on the property. They want to be the only one that have a lien on the property. Okay. So I know I kind of breezed through this. I thought it was going to be a little bit longer, but y'all guys let me know if you have any questions related to anything that I shared with you today. Again, this episode that we did is related to secure your energy as well as primetime home buyers. I like to share information that can be utilized by the conventional homeowner as well as the tax lien and tax deed expert or real general foreclosure investment people who does that. So let me know if you have any questions related to that. Now I'm trying to come up with an agenda because I do have some things that I want to revisit this summer. And I think that is very important because we're going to be hitting some spots up in July. Hopefully, I keep giving y'all a date, but my nursing contracts literally control my schedule, and I do apologize. I've been trying to get to tax lien sales, and it has not been working out because I wanted to interview some people for you guys again. Get some other expert advice, people who are in the field. So my goal is to definitely do that. I'm not going to shoot for a date because every time I do a date and I say it loud, something happened. So I pray that once I'm out of this contract in July, I'm going to be hitting the road for about 2 months, and we're going to be tax lien and tax deed experts. That's all we're going to do for 2 months. Okay. So just look forward to that when it gets a little hot. What I do think is important for us to revisit right now is actually understanding real estate law. I have just some things that I want to go over to close off the real estate law seminar. So there are some episodes that are on YouTube. If you look, we have different playlists on YouTube. And I do believe that some parts of the law seminar are available for you guys. So it's teaching a little bit of foundation of how to research law, what laws, what type of hierarchies in law, and what particular hierarchies apply to us as real estate investors. Things that we are mandated to do and things that are changing and how to track that. So we're going to get back to that. That's going to be happening next week, as well as we're going to do a trending topics. We have some things that's going on in the market. We have things that's changing because we have migration. We have the housing crisis that's still going on. We have a lot of empty homes. It really doesn't make sense. So we're going to be doing a trending topic coming up next week before we get into some more nitty gritty. You know what I like to do. But if you have any suggestions or any questions or about any topic that you want to talk about, let me know and we will do a live on it. We do have a monthly free Q&A that I host every month, and it's usually the third Sunday of the month. If you're a part of our group on Facebook, I make the announcement there, as well as if you go on the website, you'll be able to see our free monthly seminars. Now, let me see if this is going to let me show you guys, because the last time I was trying to show you the website, you see it did it to me again. Every time I try to show my website, it seems to like something's going on, like it's crashing. I think my memory, I got to open it in a new tab. That's what I think. Let me see something, guys. I'm going to open it up in Bing, homeowners, home buyers. Sorry. I'm trying to put my website up in this other search engine. See if it come right up. Primetime home buyers, tax lien, sales. Sometimes, oh, baby, it came right on up. Yeah. Okay, y'all. Y'all don't know how hard it is to actually do this stuff where you're managing your own things, and sometimes you can't even get any feeds. So sometimes if I type primetime home buyers up, it won't show up, and I'll be sad because I don't be in the search engine. Don't pay mind to me, guys. So now I'm in the search engine, dog. I've been doing this for a lot of years, y'all. Just bear with Lashley. I'm grateful. So this it came up. Let's see what happened. If it let me just show y'all where y'all can sign up. I don't use Bing at all. See if it's gonna help me. That's not it. Why would you do that to me? Hold on. I thought I had it up. Why the U.S. tax lien came up? Gonna make me cry. Let me pull it up. I thought I had a friend, y'all. Don't laugh at me. Do not laugh. Lastly, been working on this, doing Google, paid ads, all types of stuff, to get in the algorithm of my competition. And sometimes when I put it in Google, it pull up. Okay, can y'all see it? All right, here you go. Thank you for bearing with me, guys. I was having a little issues. Hurt my feelings. I thought I made it. Not yet. All right. Come on, baby. Show me what you're working with. Why is it not showing the whole screen? Hold on, guys. I never use Bing. This is the first time I'm using it. The page is having some problems. Okay, can y'all see it? All right. I think it's doing okay. Let me know. Can y'all see it? Okay. So here we have services. Let me see if this is going to be. Oh my God. This is crazy. I can't. I'm going to cry. All right, we're going to stop sharing this. What I'm going to end up doing is I'm going to end up uploading the video because I'm relentless. What I'm going to do is just upload the video again so y'all guys can know when the seminars is coming up. It's about a 2-minute video. I'll upload it right after this so it can be all on the platforms and you guys can sign up. Just go to the website right here. And on that website, you'll go under services. And under services, you'll be able to see consultations. Under the consultations, it's a free consultation. And it says free monthly seminar. And that's where you'll come into the Q&A and you can ask whatever questions you want. I probably do a brief presentation depending on how many people participate. But if I have a small number of people who participate, I usually just get straight to the Q&A to answer y'all questions, okay? And that happens the third Sunday at 11 a.m. every month. Okay, so I do apologize for the glitch. I'm going to clear my system out. I think I got too many things running. And I need to clean my cookies. All right. So I love you guys. I want to say thank you for being with Lashley. And I will see y'all next week. We're going to be doing a trending topic. It's going to be a little bit more exciting, but I hope this information was good for you. And I was able to help you understand a little bit more about escrow accounts.
The real estate market often seems like a distant world where only an elite of experts is successful. In a time of so much uncertainty in the air and bad news, realist investing can seem intimidating. But today, I want to tell you that if you make the right decision today, you can enter the real estate market from the back door. Bad credit record? No credit at all. Do you dread the idea of having a home loan? Do you dream of owning investment properties? You are in the right place and right time. Because we have created a program, which is a tax lien and deed investment online course of only 14 hours. This course is specially designed for people like you who have big dreams. You will learn at your own pace and everything from your home computer. This is your chance. Join our membership for $19.99 a year. What are you waiting for? Visit our website primetimehomebuyerBuyback.org and sign up today for course access.